one time again. Welcome everyone for another insightful session for the Wealth Builder Masterclass series. And if you're here today, I seriously feel that you're struggling to raise capital or you wanted to learn some new techniques from our good friend Dylan. Our title for today is a capital raising system that consistently raises capital. So I think from my own experience, I feel like capital raising is not that complicated or confusing the way people perceive it or the way it's being handled in the market because it's such a big gimmick. And then I know a lot of people are teaching so many different ways of raising capital. And when I go talk to the pros, the institutional level people, and they're like, oh, it's like something you know or you don't know. Basically, it's a relationship game, trust game, how you are positioning yourself or how you're branding yourself. And then I think people get confused with the branding and positioning as well because they think that's something outside of them. But this is something you, branding is you, positioning is you, it's all about you. So that's what we're going to be learning from you today, Dylan. And now, once again, welcome to our masterclass. And I'm super excited to have you here. We've been friends for a long time. You've been on my conference before. And but before we get started, I wanted to do a small little disclaimer, if that's okay with you. All right, so this session is strictly for knowledge sharing purposes and should not be considered as a legal, accounting, or investment advice. If you have any specific questions regarding your investments or you need any legal advice, please reach out to an appropriate party, your CPA or your attorney. But this is totally an educational session. All right, so Dylan, stage is all yours. And I understand that you have a presentation that you're going to share with us.
Yes, I do. So awesome.
Take it
Yeah,
away.
really looking forward to it. And you guys are in luck because guess what I have in my presentation too? Another disclaimer. So appreciate you guys jumping in today. And I recognize some of the names that are on here. I'm actually tuning in from my hotel room. I'm in Salt Lake City at the Best Ever conference. So I don't know if there's anyone on this call that's currently here, but if there is, would love to meet up after this. So yeah, what we're going to talk about today is my goal is that you're going to walk away from this with a different idea and more motivation and confidence in your ability to raise capital. So I'm not going to get into my story that much on this call. I want to keep the time that we have together focused on really what I've learned and just giving that value to you guys. So I'm going to go ahead and share my screen. We'll jump right into this. And if you have some questions, obviously go ahead and throw them in the chat. I know Vinky's going to be monitoring that. I'm going to do my best to get through what I have prepared for you so we can open it up to some live Q&A. And if we need to cut things a little bit short, then we'll do that. But here we go. So the idea behind capital raising, this is something that's dawned that just really clicked in my brain probably about 6 months ago. And to put this into perspective, I've been in the real estate game and raising capital for about 6, 7 years now. And this is what I realized is that capital raising, it's not a money problem. It's a trust problem. And if there's one thing that I want you all to walk away from this masterclass today, it's to understand that. And because once you understand that, it changes. It shifts how you think about it and it changes how you show up to people and it makes capital raising a little bit less scary. So I don't know where people's experience level is in capital raising on this call, but regardless, it's irrelevant because I've seen people that have raised 80, 90, $100 million or more still not understand this concept here. So regardless of where you're at in your journey, you guys are in for some good nuggets here. So one thing I want to, excuse me, one thing that I just want to highlight on the people that we serve, the people that are going to get a lot more from this are fund managers, syndicators, capital raisers. I don't know what people's experience is on this call, but what we have found is people that have already raised at least $10 million or more understand and grasp and can implement a lot of these things that we're going to discuss. Or if you're losing investments due to lack of follow-up or wasting time with disqualified leads, what we're going to be talking about, this is exactly for you. This is why we do these classes and why we provide a lot of education. So there might be some of you here that might be asking then like, okay, like am I in the right place? So I just want to touch on that real quick. You might be asking yourselves, what if I'm not raising capital yet? What if I only do one or two deals a year? Or what if my investor base is small? It's okay. Because at the end of the day, what we're focusing on is building trust before you need it. So again, regardless of where you're at, there's going to be things you're going to be able to take from our conversation today and implement into your business immediately. So here's my disclaimer, right? Presentation for educational purposes only, does not constitute legal financial investment. I'm not going to read through this all again. It's recorded, it's on there. You can pause it if you really need to get into it. Really, really, like if there's something I can stress the most, if you're going to get into the business of raising capital, consult with a securities attorney before you do anything else. Nobody wants to get caught up with any government agency that with a three-letter acronym, okay? The SEC being one of them. So always consult with a securities attorney before you really start going down this path. And both myself and Vinky, we have connections with multiple securities attorneys. So if you're looking to get connected with one, then reach out to us. We're happy to make those introductions. Okay. So I want to ask this question. Feel free to throw it in the chat box. Do we have a live chat, Vinky?
Yes, chat
Okay.
is open for everyone. Q&A is
Okay.
open for everyone. I
So I
think
want to
so.
pose this
Can somebody
question
say
here.
hi?
Let me know your thoughts, guys. What's the one thing all investors need to have before they invest? What's the one thing they all need to have before they invest? Curious to get some of your thoughts. Capital, yep. We got trust, investors that believe in your idea. Good. Really good ideas. Yeah, and this is what I hope you guys understand with it is building trust. It's like a bank account. You're either building trust or you're breaking trust. Okay. So building trust is like a bank account. As you keep promises, as you show honesty, as you're consistent, you're making these deposits into your trust account. Now, if you start breaking promises or you show deception or you act inconsistently or you ask too much, what you're doing, those are withdrawals. And one thing that you got to understand about the difference between these, they're not weighted equally. It you might find yourself putting way more trust into these deposits with fewer withdrawals, bringing you back down to zero. So one thing you've got to understand is that you're always building trust or you're breaking trust. You're always building trust and breaking trust. So what I want to ask is if I could show you, and go ahead and throw a one in the chat box here, if I can show you in the next few minutes how you can build trust on autopilot and make sure you're spending time with qualified leads that will ultimately lead to more predictable capital raises. Do you feel like the next 60 minutes or the next 40 minutes we have will be worth your time? If I can show you those things, do you believe it'll be worth your time? So interested to see where you guys are at. Go ahead and throw that in the chat box. Now, I want to share with you my $200,000 mistake because this is ultimately what led to what we've created and how we serve people in the industry now. This was a few years ago. We were just launched our fund and we had connected with a business owner. He just sold his HVAC company to private equity. So you know he's sitting on multiple millions of dollars, right? So he's got money. We had a good relationship with him, but he was unfamiliar with multifamily investments. All he's ever done his whole life was stock market stuff. So we had multiple conversations and educated him on it. And he's like, "Hey, I'm in. I got 200K. I want to move around. Let me know when you have a deal." We said, "Sweet." So we put a checkbox next to his name. We didn't have an active deal right then. We said, "James, we'll come back. We'll follow up with you. And once we have a deal, and we'll go from there." And then we went silent. We didn't say anything because we were busy looking at deals and doing other things. Finally get a deal about 3 months later, and I call him up and I say, "Hey, James, it's Alan. We got a deal. Are you ready to go?" What do you
Too
think he
late.
said?
Too late.
Dallin, like literally, I'm not making this up. Dallin, I wish you called me 2 weeks ago. I just invested that into another opportunity because I'd forgotten what we talked about. Man, that stinks. A $200,000 investment. Okay, that would have equated to probably around the life of the deal, probably around $40,000 revenue that would have come to us and our company because of that investment. And it's not because he wasn't interested, it's because we went silent. We didn't have a good system, we didn't have a good process in place. He wasn't to blame for that. We were. That was my $200,000 mistake. And that's really what motivated myself and our co-founder, Paul, to just dive into understanding and figuring out what gets people from not knowing you to wiring $100,000 or more. That's a lot of money. 80% of Americans make $100,000 or less per year. And here we are with most funds and syndications, the minimum investment might be $100,000. So what does it take to get somebody from here to there? And that's just over the few years, that's just been the question we've been working on solving and are continuing to optimize. And again, it comes down to that trust. So this is what's typically common in the capital raising space, right? Inconsistent follow-up. We think our brains are our CRM. We tell ourselves, oh yeah, I need to follow up with Vinky in 3 days, and I don't follow up with Vinky in 3 days. It's not because I didn't have good intentions. I just got distracted with other things. So scrambling before deadlines, we see this all the time. People are so focused on underwriting deals, finding deals. They finally get a deal under contract, and now they got to raise $10 million in 45 to 60 days. And they're like, oh, shoot. And so now they're calling their friends, family, and they're doing everything that they can to try to fund that deal. Or they're guessing investor readiness, like just pulling up your phone saying, okay, I have this amount of potential capital. That's not normal. And readiness is visible. That's not normal. So it's if this is something that you've excuse me, if this is something that you've experienced, if you've gone through yourself, it's okay. Like if capital feels unpredictable, you're not broken. You're just lacking a system. And that's what I'm hoping to share a little bit more with you guys today. So this is what typically happens, okay? So typically happens, get some manual follow-up, you're tracking conversations in your head, you get spreadsheet chaos, you're on Google Sheets, you're using Excel, you're using some colors, you're trying to update notes, you have a CRM that doesn't talk to your processes. And what this unfortunately often does is it leads to pitch first behavior. And when I say pitch first behavior, say we connected for the first time, Vinky introduced us, or we met at an event like I'm here at Salt Lake, rather than getting to know you and starting to build that trust, I go right into, hey, let me tell you about this deal. Look at these returns, look at the markets it's in. This is going to be a home run. And people don't, I don't think they mean any ill intent. They just, again, they don't have a system, they don't have a process. And so they're doing what they feel like is best. So this is typically what happens. So what I like to do with you now, okay, so I have five questions we're going to go through. I want you to grade yourself. I want you to grade yourself, and it's going to be red, yellow, or green. So we're going to take about 60 seconds to go through these. But answer it honestly, because these questions that we're going to go through, this is going to give you a solid foundation to where you're at in your ability to build trust effectively with people so that they want to invest with you. So first question is, how effective is your lead nurturing? And what I mean by this is emails, SMS, just frequent touch points. So red, I don't have any follow-up. Yellow, I send a few emails manually. Or green, I have an automated sequence that nurtures every lead. Just write this on a piece of paper on your computer right next to you. Just grade yourself. Red, yellow, green. Second question, and you guys, thank you for Barry. Appreciate you sharing in the chat. You don't have to share if you don't want to. This is more for you guys. So, but I'll leave it up to you. If you guys are comfortable sharing, I think it might give everyone some good insight that they're not alone because a lot of you are probably not going to quite be where you want to be, and that's okay. That's normal. The point of this, again, is to establish your foundation and give you clarity. So now you have a clear path of what you need to implement. So question 2, how segmented is your audience based on lead type or behavior? So everyone gets the same messaging. I have basic tags or lists, or I segment by interest, stage, and engagement. And what I mean by segment by interest, stage, or engagement, if somebody expresses interest in potentially using a self-directed IRA to invest with you, don't start sending them all these emails about depreciation and tax benefits. That's not why they expressed interest. It was self-directed IRAs. So when I say segment by interest, stage, and engagement, that's what I'm referring to. Question 3, how confident are you that your leads stay warm without constant manual outreach? I lose track of people all the time. I try to keep up, but it's hard. My system handles most of my follow-up without me. Red, yellow, green. Fourth one, how much insight do you have into what leads are actually clicking, opening, or watching? I have no idea. Yellow, I check occasionally. Green, I track and score engagement consistently. And then the final question, how often do leads go cold after initial interest? Almost every time. It happens occasionally. Mostly stay warm or re-engage through my system. Red, yellow, green. Okay, I'll give you guys a second. Finish scoring yourself on that, because on the next slide, there's going to be some suggestions on based on where you're at, some focuses that you can focus on. Okay. So if you scored 3 or 5 greens, your leads are engaged. This is excellent. This is a great place to be in. Now, at this point, it's just about optimizing your workflows and A/B testing and or tightening up your segmentation so you can really meet people where they're at. A good system, a good CRM, it doesn't replace you and it doesn't replace that personal connection. It allows you to spend your time with the right people that have shown engagement. And I'm telling you from personal experience, if you don't set boundaries and value and protect your time, other people won't. And they will take and take and take and take. Okay. So for me, a good CRM and a good system helps set that barrier and those boundaries for me, because by nature, I'm a go-giver. And I feel like I give more than I probably should sometimes. And a lot of people appreciate it, but unfortunately, a lot of people take advantage of it as well. So having a good system for me allows me to help protect my time. Okay. So if you have 2 yellows, your stage status here, leads might be warm, but your follow-up could probably be dialed in a little bit. So using a CRM like Capitalist Pro or any other, look, you don't have to use us, right? I would hope you do. But the point I'm getting here is having a good CRM, something that has pre-built nurturing sequences and a scoring system. So you can track you can quantify their engagement within the system. Okay. If you have 3 or more reds, this is just follow-up failure. At this point, it's okay if you're here. Okay. It's not uncommon for people to be here. At this point, just focus on some basic automations. Some basic automation, some basic segmentation, some emailing, some touch points. Start getting that out right away, because I'm telling you, if you leave it up to your manual efforts, it's going to slip through the cracks and it's not going to get done. Okay. So the next thing I want to talk about here, this has proven more and more true the longer I've been in this game. Follow-up timing matters more than frequency. Okay. So what I want to talk about here is a life cycle of decision making. And this is for people. Okay. So you see this line going across horizontally. Excuse me. This is the comfort line, right? We've all been there. We're in a cush job. Life's good. We're not being challenged too hard, but we're also not really progressing maybe as much as we'd like. That's your comfort line. What we have found out is that the closer somebody is to their comfort line, the more difficult it is for them to make a decision. Now we're talking in this case, in this example, people investing in deals. Okay. If they're going to invest $100,000 or more, if somebody's making two, three, 400,000 a year, stock market's performing, they're going on vacation, trying to convince them or get them to that point where they're comfortable investing with you, it's probably not a priority for them. So when do you need to be connecting with these people? This is when people are at their highs or at their lows in their life. So what does this look like? A high, I shared the example, our $200,000 mistake. That gentleman had just sold his company to private equity. He was at a high, right? He was at a high, he had the money, and he was looking to now further diversify. Okay. An example of a low, maybe somebody just got crushed. Maybe they had all their investments in Bitcoin a few weeks back and that tanked, right? Or maybe they lost a job. So those highs and lows in people's lives, that's where people make big decisions. That's where people make big decisions. Now, the challenging thing is we don't always know where they're at. We don't always know where they're at on this curve. So having a system to track and just stay relevant without spamming, nobody likes spam, stay relevant, stay top of mind so that when they hit this high or low, you're the one that they think of to help them out. Okay. That's what this means. And so when I say timing matters more than frequency, if you're email blasting somebody about a deal and they're close to this comfort line, it doesn't matter if you email them 20 times in a week, they're probably going to say no. But if you have at least a weekly value-based email going out and somebody hits one of these highs or lows, but they've appreciated the value you've been providing, now the chances of them working with you are probably a lot better. Okay. So this is a life cycle decision of decision making. Timing matters more than frequency. Okay. So let's check in real quick. I know we've been chatting for quite a few minutes here, but do from just already what we shared, let me know. Let me know where you're at. Have you already experienced a new idea, a new concept? You can just say yes, no, say this is a waste of time in the chat box, whatever you want to do, but just let me know where you're at. Okay. Is there a new idea, a new concept, something that I've shared today that you feel like you can ultimately apply to your business immediately? So I just need to make sure that this information is relevant to you guys. So I would really appreciate any feedback and things that you could throw in there. So, and listen, nothing that I share with you guys today is going to require you to buy anything. Like we do have some pretty special things that Vinky and I have been working on together. So if you do feel like there's alignment, if there's things that you would like to learn more, then there will be an invitation for you to connect outside of this. But the things that we're going to be talking about doesn't require you to buy anything from us. Like regardless of where you're at, you guys can implement this into your own CRM, into your own business. All right. So cool.
So
All right,
let me ask you something here,
please.
Dylan. I mean, you brought up a really important point regarding the timeline, and then I love how you brought this life cycle of the capital raising, and then you put the highest high and the lowest low. And the thing is, highest house everybody targets. Like, okay, somebody exiting a company, this person has a lot of money. Let me go target this person. Let me go talk to this person. People are really pumped up, and they're just like all over, with my deal, my deal, my deal. I've seen that multiple times in multiple conventions, summits, or conferences I go to. I mean, that's what we see all around. But you mentioned here something very important. I would like everybody to pay attention or stay with me is the lowest low. I think that's a really sweet spot as well to get the money. Because when people are lowest low, let's say somebody lost a job, at that time your pitch is going to be really good. Okay, hey, if you have a passive investment going there, you have some passive income coming in, it's going to help you. You don't have to stress out. And I have seen people investing like that, when they are just, trying to get another job or they are kind of in transition or in between jobs. They like to invest at that point too. But I have seen that as well in my experience. A lot of people, they miss that. They feel like, okay, this person is hurting right now. Let me not touch that. But thanks for bringing that up. I really like that.
Yeah, and listen, it's not to we're here to serve people at the end of the day. Like if you're here just to get into capital raising to make money and think you're going to make all this money in the world, one, it's going to be a lot harder than you anticipate. And two, that's the wrong motive. Like, there's a difference between raising capital and attracting capital. And we talk
Mm-hmm.
about this all the time, right? So if you're in a position to attract capital, you're showing up with value and you're there to serve genuinely. So what people go through in their personal lives, we can't control. And that's another
Exactly.
important thing to understand is if somebody says, "Hey, not right now," it doesn't mean they're not interested. I used to always take that personally. It's like, "Oh no, not right now." I'm like, "Oh, they don't like me. They don't like No, that's not the case. Like they just weren't at that high or that low. They were closer to their
Hmm.
comfort line, and that's okay." Okay, perfect example here. A few weeks ago, it was about 4 weeks ago, a gentleman reached out. He was going to invest into our fund 2 years ago. He moved money into a self-directed IRA. We sent him docs, and then nothing, just like nothing, just went cold. And we're like, what in the world? Anyways, he's been on our system. We've been dripping to him for 2 years. He reaches out 4 weeks ago and he says, Dallin, the self-directed IRA is burning a hole in my pocket. I haven't moved it. Like, let's jump on a call. I need to put it to work. So I jumped on a call with him. We're not actually actively raising into our fund. So I just caught up with him and say, hey, what are you looking for? And he's like, I'm looking for this type of investment. And I said, what are your thoughts around self-storage? And he's like, I'm open to it. I don't know too much about it. So I actually introduced him to one of our Capitalist Pro
Pretty
users that does luxury enclosed self-storage. And so I made that introduction. And then a week later, I had a conversation with the owner of that self-storage company. And he's like, Dallin, I just gotta say thank you. I don't know what happened, but he's already funded. Like his money's already in our account, and those two didn't know each other a week prior. Okay. So at earlier, that guy was not at a high or a low. And then after 2 years, realizing what his self-directed IRA could have made had he put it to work,
awesome.
that was a low point, right? That was some pain that he's experiencing. So
That's a really good point too. And I think before all this, trust has to be there. And once they have the trust, then they're gonna move, whether it's higher or lower, or sometimes in between too. The other thing that you brought up right now is that I just picked up when you were sharing about this guy is like introducing to the others. If you do not have what they are looking for, if in somebody in your network they have that whatever they're looking for, it's okay to introduce because that's gonna make your trust stronger. And
yes,
next time, guess what, they might be investing with you again or maybe larger amount. So don't be scared, because I say this all the time. I'm going to say it again. There's a lot of fish in the ocean, trust me. Even if you decide today that I'm going to fish all, you cannot do it no matter how many lives you live. There's plenty for everybody. So when you work in collaboration, things happen much faster and it takes you much farther.
100%. And we're gonna dive deeper into that in just a minute. Um, how much money do you think, how much money do you guys think I made from making that introduction? So I made that introduction. It was a $50,000 investment. How much do you think I capitalized off of that? I'm curious.
Just the trust and the relationship right there. I think that has more than you put a value on it, I think.
Yeah. I didn't take, there's no fee, there's no like lead generation, there's nothing. It was a simple introduction because those two people I knew could support each other. And that trust with both of them now is a notch higher, right?
Hmm.
Trust is not built overnight. Trust
Exactly.
is not
Mhm.
built overnight. It takes time. So cool. All right. We're gonna jump into some more stuff here. So we got about 25 minutes left. Binky, how much time do you usually leave for Q&A?
Usually we have 60 to 90 minutes. So as long as you have like really insightful information and people like to stay and ask you questions, we are open to that.
Cool. Well, I guess we'll just keep an eye on the attendance then. So if we start seeing it drop, we'll know we gotta turn things up a little bit. So cool. All right, guys. So one thing I want you to understand is that the model around raising capital, it's already a broken model. And this is what I mean by it. Raising capital is unpredictable. And the reason for this is because at the end of the day, we're raising from people, and people are unpredictable by default. Okay. And the current industry, a lot of the current industry, it teaches people how to find deals, how to source deals, how to underwrite them, which is all good. You need two things to make a deal happen. You need a good deal, but then you need the capital. So the industry itself trains a lot of people to source and underwrite deals. And Vinky and I, we go to these events, we hang out. They're still great events to network and to meet people. But because of that, and because there's not as much information around capital raising, it leads people to pitch too early. And it leads people to pitch before that trust is really where it needs to be. And when you do that, it often leads to this idea that I touched on earlier of raising capital versus attracting capital. So if you're pitching too early, if you don't have that trust, if you're asking for people for something when you haven't made those trust deposits, now you look like an asshole. That's a term that we've made up. An asshole is somebody that only shows up when they're looking to get something from you. We've all experienced it from someone. Maybe we've even been in that position without meaning to or not wanting to. We just didn't know that there was a better way. So the model already is broken, but we're here to change that. We're here to shift how people think about raising capital. And again, raising capital, it's not a money problem, it's a trust problem. So, and have you guys heard that definition? I'm sure there's a lot of them. That definition of insanity, doing the same thing over and over and over, expecting a different result. We've got to change that, right? I've been an asshole myself in the past too. But from this presentation, I hope you approach this and view it a little bit differently. Because when it's done right, it goes from asking and pitching to inviting. If we had more time, I'd break down how we raised $50,000 from a single text. One text about that long, $50,000, yep, wired 3 days later, it's in our account because that trust was at a certain point. So that was an invitation because that trust was at a certain point. So, all right. So here's something to understand as well. Trust is more important than tactics. And just because you have better pitches, it doesn't mean that you're going to have better outcomes. Now, early on in my career, I heard this idea, or I was told or sold on this idea of if you find a good deal, the money will come. If you find a good deal, the money will come. Bull crap. It does not happen unless you've got a certain level of trust with people already established. Okay. And for those of you that are, Vinky, do you have a pulse of the people in your network? Are they multifamily, storage, kind of a mix of everything? Yeah.
Yes, I do. Mhm.
So regardless of where you guys are at, what I've noticed is when we got into multifamily space and now you're looking to raise millions of dollars and you start getting into syndications and you start getting into funds, this really this idea, if you find a good deal, the money will come, does not happen because a lot of people don't know you. Even it could be a killer deal, but if they don't know you, it's going to be hard for them to want to partner with you. Now,
Let me add on one thing on that. When I
please,
stepped into real estate, same thing happened to me. Even people know you, that trust is not there, like that you can perform in this arena or you can do something with the deals. So
yes,
to support you, whatever you're saying, so giving you a real life example.
yes, very, very good point. Because Vinky, in your example, you had this trust with these people already, but as you start transitioning and getting into a different
New
business
role.
or a different
Mhm.
investment, people might be like, "Ooh, I trust you, Vinky, but I don't know that you might have enough experience here." Now, the great thing is, here's the great thing. In larger investments, you can partner with those people with experience and piggyback off of that. And so we're going to talk about that in just a minute of what type of trust that looks like. So, all right. So capital doesn't move at the speed of opportunity, it moves at the speed of trust. So I'm going to break this down real quick. We're going to talk about some of the hidden costs of not having a good system in place or not being able to build trust effectively. So what we unfortunately have, some of these we've experienced ourselves, but we've seen this a lot with people that are using our platform and people that aren't, just people that are in the industry. The hidden cost of not being able to build trust, it's deals lost because investors weren't ready. I was just talking to somebody yesterday, a lender. So they're putting together loan packages for a lot of teams this past year. And they said it's been wild how many teams have had to back out of sales just because they couldn't get the capital raised for it. Just because they couldn't get the capital raised. Or people are giving away way more equity than they want to somebody that can bring the capital in. So they're doing all this work, getting this deal together, meeting with the brokers, underwriting, putting the team together, and then it comes down to the capital. And now they're giving up 20, 30, 40, 50% of the deal, maybe more, to somebody that can actually fund it because now they're in a crisis. Okay. Or maybe you're just getting burned out from over communicating to underqualified leads. People you should not be providing time to because they're not qualified, and you should have qualified them much earlier before you invested your time with them, right? So that's the hidden cost, but let's actually put some numbers into it. So this is a formula I put together just to simply break this down. So let's take the number of investors. Say you bring in, or I'm sorry, say you lose one investor per month because you don't have a good system in place. Multiply that by 12 months. And for the purpose of this, we're using an average investment of $100,000. I know that's a minimum investment for a lot of funds and deals. So you take that, that's $1.2 million over that year that you could have invested into another deal. Now, a due diligence fee here, people will take different percentages and things based on how it's structured. They might refer to it as an acquisition fee, but you'll typically see 1 to 3%. So just to keep things simple, I put 2% in here. Okay. And this 2% is usually provided right around the time of or at closing or shortly after. So by losing one investor a month, not only is that 1.2 million you can invest into another project, but that's $24,000 that you're out. That 24,000 is going to you, right? Or your company. Okay. So one investor a month may not sound like that big of a deal, but what happens when we start compounding it? What if it's five investors a month? That's $6 million over the next 12 months you could have reinvested, and 120,000 of revenue that could have come into your company. Okay. What if it was 10 a month? These are the hidden costs that people don't fully understand or conceptualize when it comes to the process of raising capital, right? I mean, 10 investors a month, if you're letting 10 people slip through your cracks, that's 12. How many, who would love to have $12 million to invest in a new project right now? I would, right? We all would. And that alone, just that 240,000, that 240,000 is revenue to your company so you could keep reinvesting and growing and serving more people. This is a hidden cost that a lot of people don't talk about. Okay. So this is what I want to introduce to you. This is what we refer to as a capital flow funnel. And so there's really three stages that people need to go through when it comes to deciding to work with you or to invest. And so over here on the left, we have the awareness, consideration, decision. Awareness, nobody can work with you if they don't know who you are, period. Okay. Vinky does an incredible job building awareness. She's at all these events, she's networking, she hosts all types of these master classes for her community. Vinky does an incredible job about building awareness. And then consideration, once people know who you are and how you might be able to help them, now they're like, okay, let me learn a little bit more about what you do. And so they're still watching. That's your consideration stage, and then decision. Okay. So what the capital flow funnel is, this is built into our CRM, but it doesn't matter what CRM you're using. Again, just take a picture of this and implement it yourself. I don't care. At the end of the day, like, I want more people to be more successful in raising capital and serving others. So within the system or the capital flow funnel, you've got channels. Channels are how people hear about you. It could be social media, it could be live events, it could be a master class like this. And what from those channels, you really want to highlight how you serve people. Hit on those hot buttons, those pain points. Are you tired of losing money in the stock market, right? Do you have a 401k that hasn't been performing? Maybe we should talk about self-directed IRAs. So you use those channels. A lead magnet, it's this might ruffle some feathers. A lead magnet is not a how to passively invest PDF that you throw on your website. That's not a lead magnet. A lead magnet, Alex Hormozy has the best definition I've ever heard. It's a complete solution to a narrow problem. Complete solution
Okay.
to a narrow problem. That's a lead magnet. You're providing value in exchange of somebody's information. Okay. So there's a lot of different things you could do out there. We use quiz funnels for our users. So it's basically choose your own journey, helping them get clarity on whether they're looking for cash flow or appreciation or tax benefits, right? Clarity, complete solution, narrow problem. Okay. Then we incorporate video sales letters, workshops, we use webinars, and we integrate a lot of evergreen webinars. For those of you that are familiar with that term, they're pre-recorded webinars like they're live. By the way, this is live. Okay, I'm in Salt Lake. Nikki and I are here. This isn't pre-recorded, but they're very effective way to educate and nurture people before you get on a call with them. Because by the time you're getting on a call with somebody, they need to be 80 to 90% sold on you on you. Okay. You do that through these various assets. And the whole point of this is to channel people into a wait list. Okay. Now, unfortunately, this is what happens. We see this a lot. Somebody goes to an event or somebody messages them on Facebook and say, hey, I'm seeing what you're doing. I want to learn more. And then they say, oh, hey, look at this sweet deal. Look at these returns. And they bypass, they jump this entire process. So a good system, what it actually needs to do is guide people through each one of these stages on autopilot. When a good system and a trust machine is built, this is what it can do. Okay. Now, some things that are incorporated with this engagement scoring, we quantify. If somebody opens an email, we add some points. If they click in that email, we add some points. If they submit a form to join a workshop or a webinar, we add some more points. If they schedule a discovery call, we add points. And so now what we're doing is we're quantifying their actions. So I don't have to think how engaged they are. I just look in the CRM and I can see if their number's higher, obviously they're more engaged. And that changes how we reach out to them. That changes how we follow up with them. Okay. And then targeted drip campaigns. Again, if somebody expresses interest in self-directed IRAs, why am I going to blast them with depreciation and tax benefits? That's not what they expressed interest in. So meeting people where they're at. And then this is honestly the biggest one for me. I got ADHD. I always joke that it was undiagnosed. No, I'm actually diagnosed now with ADHD. So I have good intentions to follow up with people and I forget. Not because I don't care, but because my brain is going 1,000 miles an hour in different directions. So one thing that we've integrated into our own system that we help some users with is we automate notifications and tasks. So that engagement scoring, okay, let's say Vinky's opening, clicking, submitting forms, coming to workshops that we're having, but she hasn't scheduled the discovery call yet. Once she hits a certain level or threshold, a task is then assigned to me automatically. Hey, Dallin, give Vinky a call. So now I give Vinky a call because the system was tracking what she was doing. To Vinky, it's a cold call. To me, I'm going into that call much more confident because I can see what she's been doing. And I don't like cold calling. I'll be the first one to tell you that. I will refuse to cold call people. But if I know that they're engaged and I can see that, then it's easy for me to give Vinky a call and say, Vinky, I Dallin here with Capitalist Pro. See that you've been on our email list for a while and we haven't had a chance to connect yet. I mean, there must be a reason why. I'd love to learn a little bit more about you, right? So that's what having a good system and what the capital flow funnel can really do. Now, this here, the trust timeline, this is what we've been working up in our minds for the last 6 months. Okay. No longer refer to your pipeline as a sales pipeline. Get that out of your vocabulary. Throw it out. A sales pipeline is very much what you need that person to do to move them along. A trust timeline, this is what that potential investor needs to feel. That's what they need to experience before they're comfortable working with you. Okay. And it's comprised of these 6 stages. Visibility. So when somebody's here, I see you, nothing feels off. That's the first stage of the trust timeline. And then consistency, you keep showing up the same way. Okay, I met Vinky and Dallin on this master class. Then we run into each other 3 months from now at a live event. Are they the same people? Is it consistent? Right. Third is relevance. Is what you're talking about or what you're offering as an investment even relevant? Does it even apply to them? And then association, this is where helping people understand that people, if I was looking to invest with you, people like me work with you. So we see this a lot in the medical field, right? You get these groups of physicians working together and investing into deals, and they're able to then attract other physicians because there's that association, right? So finding that common ground. And then confidence, I believe you know what you're doing. And then 6, timing. This feels like the right time. This is a trust timeline. This is what you constantly need to be moving people through. And with the right system, you can identify what stage your people are at. So then you know how you can guide them to get to that next stage. Okay. So how does that trust timeline fit into the capital flow funnel? Okay. So the more top of your funnel, your channels, lead magnets, VSLs, that's what you're really focusing on to build visibility and consistency and relevance. Okay. And then as you start going into more mid funnel, this is where you're really starting to nurture and build trust. This is where you really hit on association and confidence as you move them through. And then they're going to get to a point where they know you, they like you, they trust you, they want to invest with you. The timing's not just right. That's okay. Stay relevant, keep providing value, and have a system to stay top of mind. And then as you progress them and you get those opportunities, you're presenting it to that list. This is the capital flow funnel. This is the trust timeline. You don't need us to implement this into your business. Let me say that again. You don't need us to implement this into your business. Take a screenshot of this, take it to your team, and start applying it today. And just watch and see how your conversations change and how you show up. Okay, I guarantee it's going to make significant difference for you guys. Okay, we got a few things left. There's 3 levels of trust. We talked about the trust timeline. There's 3 levels of trust. You've got observed trust. This is what people see. This often takes the longest time to build trust, but it's pretty solid once people get to that certain point because it takes time. I was in the medical field before I got into real estate. It took, I would say, about 12 months before people in my network, even family, were like, oh, okay, Dallin's a real estate guy now. 12 months of me consistently showing up. But people are watching. They don't like it. If you're one of those people that every few months you're changing something or you looked at these investments and they're not working, so now I'm going to go look at these investments, that is not building trust. People need consistency for confidence, okay? Second level of trust is earned trust. This is when you actually start engaging, right? You're showing up to master classes like this. You're showing up to webinars. You're maybe engaging on some social media. You're maybe replying to some emails. That's the second level of trust. And you're going to build trust. Once people get to that stage, you're going to build it significantly quicker. Okay. But it takes time. And then the third level is associated trust. This is the gold standard. Okay. So associated trust is trust through others. So
Mm-hmm.
let's say we've got somebody on this call. We'll say Samuel, right? So Samuel and Vinky have known each other, let's say, for years. Okay. They've invested in multiple deals. That level of trust is there. I don't know Vinky, but let's say I also know Samuel, and we've had a level of trust for years, and we've done some things together. If Samuel came to me and said, "Hey, Dallin, I got to introduce you to Vinky," she's got a really cool investment opportunity, and it seems really much in line with what you're looking for. Oh, and by the way, I've already invested with her. If I get that endorsement from Vinky from Samuel and that trust is there, I may not know Vinky that well. But because I know Samuel really well, I'm going to work with Vinky. This led us to a $350,000 investment within 2 weeks of meeting someone that we've never known before because we had a mutual friend that we both trusted, and it accelerated that. This is your gold standard. Associated trust is your gold standard. It does not happen overnight. So if you're not consistently, if you don't have a system in place to help build observed trust and earn trust, it's going to be very, very difficult to get people to that level of associated trust where you can just make an intro and move forward. That takes years, but you can start today. All right. So, okay, we covered a lot. Another quick pulse check. Where are we at with things here? And I just want to say real quick too, like any CRM, especially Capitalist Pro, it doesn't replace relationships. I hope that's not how any of this is being perceived. Tools do not replace relationships. It actually protects them from being mishandled when they're utilized properly, right? So those that have a CRM already, you might be on Go High Level, you might be on HubSpot, you might be on Zoho. I mean, there's a handful of them out there. As we're going through this, you might feel like a lumberjack with a chainsaw that's using it like an axe trying to cut down a tree. A CRM has a lot of functionality, but you got to have a system. You got to have the process behind it. So,
I
um,
agree on that
yeah.
100%. And there is a question, as a follow-up question from Rashmi, on your comment earlier regarding the trust. So she wants to know what's your advice on people on how to build trust with people when there are several bad actors online who also do the same thing to build trust? What other safeguards should one put in place to screen them out?
Want to make sure I understand this question accurately. So I see it in the chat here. Let me read through it real quick. Um, it's a great question. You can't avoid bad actors. There's going to be other people that are holding master classes just like this with me and Vinky. People can see through the bullshit. I'm I'm just I'm just being honest. Like people can see through the bullshit, and if you consistently show up and you're genuinely you, people will pick up on that. Now, there's a lot of people, unfortunately, that take advantage of that and they'll try to fabricate this trust and they might even make up testimonials and reviews and all this stuff. There's no avoiding that at the end of the day. And I know for me, it was difficult to be consistent online because I never wanted to look like that social media star. And I'm not. I got maybe a few hundred followers on Instagram, right? There's nothing, no status of mine that I'm not trying to be like social media famous, but I think the idea and the fear of being labeled as one of those bad actors really prevented me from providing the value that I knew I could provide. So, Rashmi, there's no way around that, but that's also why it's taking longer, I think, now to build trust with people than it was previously, especially with AI. Because you don't know, like, is that video actually Dallin talking or is it some AI video that he just put a transcript into? So that's why there's levels of trust and it takes time, but consistently showing up as yourself and providing value. And the reality is, this is what's helped me. I've been through things good and bad in my life that I know can serve other people in my community and in my network. That does nothing for them if I'm not willing to share it. Now, there's some people out there that only talk about the good, and you don't want to talk about all your failures because then that's probably going to lose trust and lose confidence. But that leads to connection and trust too. if you can sprinkle in some vulnerable moments or things that you've learned along the way, and when things didn't go right, that builds trust and that builds connection. So hopefully that helps address that question, and hopefully I understood truly what you were asking.
So
So
let me ask you another question, Darwin. In your experience, what is the biggest mistake operators make when they're trying to raise capital consistently? Because we do see that, and I kind of resonate with Rashmi. We do see a lot of people, it's a lot of hype on online, on the social media, putting this stuff, that stuff, a lot of attraction for the investor perspectives. It's like a lot of confusion is created sometimes at the investor end. But I'm talking at the operators, what biggest mistake they make, in this whole chaos
when it comes to raising capital,
when it comes to raising capital.
I think pitching the deal too soon. Pitching the deal too soon. So let me go back here on my slide a little bit. Okay. So when I talk about the capital flow funnel, like our entire focus for that funnel is to bring people to this wait list. This wait list, this is the soft commitment form, right? This is people raising their hand saying, hey, I'm interested in investing and working with you. And then the deals, when you have opportunities, you're only messaging that list because that list, these people have gone through this process. They've gotten to know you. You've had some calls, they've been on some of your workshops. So not only does that allow you to be more confident when it comes to raising capital because these people are committed, but you're likely going to see more commitments and more actual capital funded because these people are more committed. They've been through that process. So back to your question, Binky, I think the problem a lot of operators make is that they're pitching
Too early.
too early. And as soon as people come into their network before that level of trust is there, and we see this all the time, and the SEC actually prevents this depending on what type of offering you have. If you're doing a 506B offering as in boy, you can't publicly solicit until you have that substantive relationship built. So if you're emailing your deal out to your entire list, there's only a small percentage that are actually going to work with you. So one, not only does that damage your email reputation, so more of your emails go to spam, meaning more people see less of your stuff, but two, you're withdrawing that trust because you haven't made enough deposits yet.
Hmm.
So pitching the deal too soon. Now again, Vinky, if you introduce me to someone and we had a relationship, would I force them to go through this entire funnel? No. No, like, because that trust is there, right?
Mhm.
So
Mhm.
use your judgment, but make sure people are guided through this process and they know that you can truly serve them. And that's what's going to lead to more predictable raises.
That's true. And let's talk about a little bit about the trust. Everybody talks about it. Sometimes I feel like so cliche. Everybody says, oh, you need to build that trust first. So how do you build that trust? Very simple question. How do you build that trust?
That's not a simple question. That's a very, very difficult question. It takes time.
Mm.
And like I said, with that, as I presented with the trust timeline and then the three levels of trust, there's not one way to build it. There's multiple ways. And when they're working simultaneously, that's when those relationships move forward. So I think if I may, Vinky, maybe a more appropriate way to rephrase that question is more so like what's one of the first things I can start doing to start building trust? Um, Show up. You got to show up consistently. I put off putting stuff out on social media. I put off recording videos, and it was just so uncomfortable for me. I would rather speak on a stage in front of 500 people than sit behind a camera and record myself. But that's just one of those things that I put off for years, and now I'm kicking myself because I can't help but to wonder where I would be had I started that 2 years ago. And this is why. This is why. Somebody said it here, Samuel, visibility and relevance. Even if I'm not talking one on one with somebody, if they can see me, hear my voice, and the stuff I'm talking about is relevant to them, that's going to lead to trust. There's people on this call right now. Some are contributing in the chat, some aren't. There's already a level of trust that's being built
Mm-hmm.
for you to me. I don't know
Mm-hmm.
anything about anyone on this call, but because I'm showing up, stuff that I'm talking about may or may not be relevant, but I'm visible and you can hear me and see me. That's building trust. And one of the best ways to do that is on social media. And don't be the spotlight. Don't be like, hey, look at me, look at all this great stuff I've done. Like, don't be
Mm-hmm.
in the spotlight, be the spotlight. Highlight other people, highlight those things that you've learned, highlight those mistakes, because now you're providing value. But people have got to see you. So if you're here, you want to raise millions of dollars, unless you're an expert or have deep relationships already with family offices and registered investment advisors that can write multi-million dollar checks, people need to see you, right? A quick litmus
That's,
test on this, go to Google and type in your name and see what pops up.
yeah, that's a good
You
test.
know what? Let's just do
Mm-hmm.
that right. I'm going off script. I'm going off script right now. Doesn't matter because I didn't even have a script, but I want you guys to see this because I think this is valuable. So let me jump over, switch screens here. Okay. So for those of you that didn't know who I was, but you saw that Vinky was having me on, you may have gone to LinkedIn or you may have gone to Google. And when you type in a name, fortunately, I have a unique name, so it doesn't get lost too much, but you see that I'm present, right? LinkedIn, by the way, the SEO for LinkedIn is better than anything else I've ever seen. So if you're not active on LinkedIn, do it because look at the first thing that comes up. Dallin Schultz, LinkedIn, right? So phenomenal. And then Instagram, then it's like, oh, okay, looks like he's been on some podcasts. Here's some videos he's done. People are going to Google your name. If they haven't heard of you and then they
Okay.
Google your name and nothing shows up, you're definitely not building trust. They're going to question like, hey, is this person even legit? Is this person real?
Mhm.
So that's a good litmus test for you guys if you want to experiment with that. Type your name in here and see what comes up. And it this is 6, 7 years of doing podcasts, doing meetups in Phoenix, investing in deal like this doesn't happen overnight. And I know that's gonna overwhelm a lot of people with me just saying that because you may not even know where to start. If I could give you one suggestion, start here on LinkedIn. Start there
That's
on
true.
LinkedIn. Okay. Because
That's the best one.
at
Mm-hmm.
least that will show up. And then get on other people's podcasts. If you're thinking about starting your own podcast, hold off. It's a lot of time, it's a lot of investment when you can tap into other people's networks and communities simply by being on theirs. Right. So,
Agree on that. So let me ask you, I'm going to ask you two scenarios. Let's break it down even more,
sure.
or you've been doing it for a while, and then I'm going to take you through this first scenario. Let's say you're just starting brand new. You do not have any investor list. And then just like, go back 7 years or 8 years when you just stepped into real estate. So how would you do it? How would you get started? What kind of system would you like to have in place? Because everybody says start with friends and family. Sometimes your friends and family, they don't want to work with you. In my case, my friends and family, they don't want to work with me. Because the thing is, I came from a corporate world, IT executive, going into academia, being a professor, and now I'm coming into real estate. Yeah, I was maybe a star in my own space earlier, but now, okay, what she's gonna do? So unless I prove myself, it was hard to break that ground. So I wanted to ask from your experience, how would somebody start without any list?
It's a great question, and I honestly can't say there's one way to do it. I'll share with you what I did that I can look back and determine that this decision is really what's got me to where I am today. So I was reading through Joe Fairless. His conference is actually the one that I'm at here, best ever conference. But when I first got into syndications and learning about that space, he has a book called I think it's the best ever
Yes,
syndication
Joe.
book or something like that. Oh, so much information. Like that's not an enjoyable read. It's very
Mm-hmm.
informational and it's a phenomenal resource. But one of the things that he was talking on in there is having a thought leadership platform, having
Mm-hmm.
a platform where you could invite people, you can have a conversation, you can record it like this, because that levels up your credibility, right? And your authority in the space. Now, in his example, he did a podcast daily, daily podcast. This was like way before everybody and their dog has a podcast now, but that's what he did and he committed to it. And that platform is what allowed him to build his community and his
Mm-hmm.
brand. So as I was reading through that, I was like, I don't want to do a podcast. I don't I don't like talking that much, but I do like live events. And so I'm in Phoenix, Arizona, and at that time, this was 2020, start of 2020. um, there were a few other meetups in the area, but at this point, I'd already been to some of these big apartment conferences, and I just felt the energy and getting around like-minded people, and that's what really fueled me. There wasn't anything like that consistently in Phoenix. So I decided to start a meetup in Arizona, focus exclusively on multifamily, and we became the largest one in the state of Arizona, focused on apartment investing that met every single month. We had Robert Kiyosaki show up a couple times unannounced to our event. And his book was a book that actually got me down this path years ago. And what that platform allowed me to do is one, we had content now, like we were people saw me on stage, I was presenting, but most importantly, what it did was it provided me a platform to invite people to that had way more experience than me. I was brand new, right? I knew enough and I was sharing what I knew. And yeah, the imposter syndrome was through the freaking roof. But
Mm-hmm.
I just felt like that's what I needed to do. And it got me connected with people that had way more networks, way more connections, way more experience than me. But since I had a platform for them to speak on, I never had to pay anyone to come speak. We'd have 100 to 130 people a night coming out to these events. I never had to pay anyone, and it was value that I was able to provide. So for me, that was one of the best ways it took for us to launch our brand. People were registering. We started building our email list that way. But if you don't already have a list, you,
That's how you started.
that's how I started. That may not at all be how you start. It might be a podcast, right? It might be going to different events or tapping into some
Working
networks, right?
on
If
it.
you're a physician, there's a lot of physician investment groups out there.
Mm-hmm.
Or if people are in tech or IT or other type of corporate sales, guarantee there's a lot of people in your circle that don't know investing in multifamily or hotels is even an option. So maybe you just start putting together some weekly workshop or webinar where you bring
That's true.
people on. Okay. But
Yeah, go to different networks. And also, I think connect with people. That's the number one thing, going to different networks and expanding your network and learn. Be curious. I think that's the key right there.
yeah,
Be curious because don't assume that you know everything, you know, because there's a lot of things that we do not know. I think there's nobody in this whole world that knows everything. So there's a lot of learning from each other. So if you're curious, that's a genuine connection that you're making. You're asking the right question by default. So let me ask you the second scenario now. So if somebody already have a list, because we do have people who already have a huge list, because you get the list too here, there, when you go speak here, there, sometimes people share the list. So you have the list. And then how do people nurture this list? You know, they're sending emails, nothing happening. I hear a lot of people, oh God, everybody kind of, people open the email, no response, no nothing. So what do you do in that scenario? I think that's where you come in. And that's a very important question that you
Yeah.
answer for us.
So this, I can't stress this enough. Almost, I would be surprised if every CRM out there doesn't have some version of this. You've
Hmm.
got to track their engagement. And what
Hmm.
I mean by that, I mentioned, referenced this earlier. Are you assigning points when people are clicking emails, if they're submitting forms? Because we, on the surface, might send out an email blast for a deal. One, it might be to the wrong list. Um, but if we send that out and we don't get anything in reply, we just assume that people, I don't know where those fireworks came from in the background. We just assume that people aren't interested. So that
Hmm.
engagement scoring, that's tracking their activity. So we don't have to think about it. And what I found is I see this on social media all the time too. People are watching and you have no idea because they're
That's
not
true.
commenting, they're not engaging, they're not liking. It's no different with emails, right? Just because somebody doesn't reply to your email doesn't mean that they didn't read it, right?
Hmm.
So having something like that in place makes it easier to really track and analyze, okay, are are people actually engaging? Are these the types of emails? So that's step number one. You gotta have some sort of scoring system in place. And as far as I know, most CRMs, regardless of what you use, have some sort of function there. And then this is the second one that's not talked about enough. Segment your list.
That's very important. Hmm.
Segment your list. And to put this into perspective, because we help users a lot on email deliverability, because if you're pitching a deal or inviting people to participate in a deal and you have horrible email reputation, it doesn't matter how good that deal is, nobody's going to see it, right? So having a good CRM, having a good system, there's other components to it, like the email deliverability. And so when you segment your list and you're meeting people where they're at, people are going to engage more, they're going to open more, they're going to reply more, and that improves your email deliverability is like a credit score. I think that's the best way to put it. And it takes time to build it, but then a few bad actions can tank it. And then spam filters are just, people aren't even seeing it. So to put this in a perspective, where most people in our industry and where a good range to be is about a 40 to 60% open rate with your emails. That's a pretty
Hmm.
good range to be in. Okay. We promoted a workshop. This was 2 months back, and we brought in a guest speaker, and we had a very segmented, engaged list. There's probably about 1,500 contacts on that list. We emailed them. We had an 87% open rate.
Got
You
the
don't
new
see that
UI.
with email marketing tools. But, and it wasn't just one thing, it was multiple things, right? So we were tracking their engagement and we were segmenting our list. Like those were the two main things we've done. And then there's other etiquette and best practices. Whatever you do, stop sending like designer emails. Like we didn't
Hmm.
even get into that on this, but if you want to trigger a spam filter quicker than anything else, include your logos, all the pictures, all the video, and do that. And you can trigger spam filters quicker than anything else until your reputation is high and until your messaging engaged in a truly engaged list. So
Tell us a little bit about your program too, how you're helping people, what it's all about, because I'm about to put the link in the chat for people because who might be interested, because we do see a lot of interest. I'm getting side messages too. So if you can share that with us, and I'm gonna share the link in the chat for everyone as well to check it out.
yeah. So that I really invite you guys to check out that link. So this is something Vinky and I have been working on for a while for you guys. Okay. So there's some things in there that we provide. If you decide to move forward with us, there's some extra bonuses and things that we'll throw in there for you. But at the end of the day, we're there to guide our users and to help them set up their trust machine. Literally everything we've talked about here. Now we have different levels, we have different degrees of how we support people. But if you check out that link, you'll see there's really two options there. One's the I'm not even going to call it a done for you. I've done that before and it's gotten us into trouble because we still need your help. And so it's more of a done with you. But what there's some more stuff I didn't even get into today. So first of all, happy to jump on another call or conversation if you guys want to learn more. But our whole goal is to help you get that funnel, that system set up. So Capitalist Pro, it's not just a CRM, right? Like there's a system behind it built by people that have actually raised capital. And one of the slides I didn't share with you guys, we've served people that are either working on raising their first million and people that have raised up to $200 million
Mhm.
before they even engaged with us. So then the question becomes, if somebody's raised $200 million, why are they even working with you? Because they
System.
don't have a system.
System.
And
That's the most important thing.
and they know like the fact that they've raised 200 million, awesome. How much more could they have raised if they had a
Hmm.
system in place? And that was a wake up call. So those are the types of people we serve. And we actually did some rough numbers on this and took a poll of all of our users, but the average capital raised, and some of this was before working with us, and some of it was while, but the average total capital raised per user is right around $37 million. So this isn't our first rodeo. We've been in the industry for quite a few years now. We've served people at a high level, and we're always looking for strategic partnerships. So if you're if you've felt or identified some alignment with what we discussed and you recognize that this is something that you want to focus on for 2026, then take a look at what Binky and I are putting together for you guys. Like we're here to help you. We're here to help you build trust. And so we have that done with you, right? That's like we're we're scripting things, building frameworks for your webinars, your video, like we're doing all that for you. Okay. So yes, it's going to be a good investment, but you're going to have that done in 90 days as long as you're
That's
working
true.
with us. Okay.
Mhm.
And then the other option for those that are like, hey, that's awesome. I'm not there yet. I get it. Okay. We weren't there yet. And again, I don't know where any of you are at on your journey. So there's another option there where it's a more do it yourself, but you still have the structure. So you still get access to Capitalist Pro, you still have the structure, but then it would be up to you and your team to integrate that. Now, with that being said, we have walkthrough videos, we have 24/7 support. We do 3 live open office hour calls a week for all of our users. And sometimes one user comes onto that call, and so they literally have us for an hour and we're just like custom tweaking and helping
Exclusive.
them out. Yeah, and we're that's what it's for.
Mhm.
So even if you decide to go with the do it yourself option, you will still have access to our team just at a smaller degree, right? Because unfortunately we got to prioritize the people that are investing a larger amount to to get their systems in place because that's the agreement we had. But either option, depending if this is a focus of yours in 2026, either option is gonna help you get there. And again, some of you might feel like you're this big train that's like at the station and you've been trying to get moving or trying to get started down this path and weren't sure how or where or how to or who to go to go about it. And I hope what I share with you provided some clarity, provided some motivation. Again, whether you decide to work with us or not, I hope you can see and feel that a lot of things we talked about today you can implement into your business and start moving forward. But it's that clarity and that concept that capital raising is not a money problem, it's a trust problem. If that's the only thing you walk away from this, it's going to change how you show up the rest of the year. Guarantee it.
That's true. And I think with the trust, you got to have some systems too, like you mentioned earlier, because people forget as I think you can handle it when you have 10 investors, 20 investors. At some point, your list is growing, on daily basis when you're showing up at the networking sessions or the conferences or you're going to the meetups like this or the webinars or master classes like this. So you're still connecting with people. So when the list starts growing, it's hard to manage sometimes. So it's a good idea to have the systems in place and have the task created for you, daily tasks, I need to talk to this person, this person, this person. Like for
Yeah, like
example, yeah, yesterday somebody pinged me is like, oh, I think I'm gonna have a webinar with you tomorrow. I'm like, no, we did that last month because it's just like that slipped his mind that we already did that. Some odd reason it showed up in the calendar again. I'm like, no, I'm
yeah.
doing with Dylan tomorrow, not with you. So those kind of very common things that can happen, but only if you have the systems in place, you have the right alerts at the right time, and that
Yeah.
keeps you going. You feel more confident too, like, oh, okay, I can do it because I know where everything is.
And we want to train our users. We want to empower them. We don't
Mhm.
want them to be 100% dependent on us. Somebody asked here, I just saw that, is it based on GHL? Yeah, yeah. So the way I look at this, Kate, GHL is a phenomenal engine. For those of you that have experience or are familiar with it can be a lot and it can be overkill. What
Powerful.
we've done is we've taken this engine of GHL and with our experience of raising capital and over the last 2.5 years of serving close to, I'd say just over 200 serious capital raisers now, we've now built this vehicle and this machine around it. So it's no longer just a CRM, it's really a system. And then the support we provide our users to empower them, to train them, to teach them so they're less reliant on us is one of the reasons why we often get people who have active GHL accounts still coming over, which is a very easy transfer as well. So if people have their phone numbers, domains, and all that stuff set up on GHL already, it actually makes it super simple. So we don't take away from what they've done. We just add to it. One thing I can't believe I almost forgot this, especially because we were talking about observed trust so much and showing up consistently. For me, showing up consistently on online was very, very difficult because I was having a hard time thinking of all the content and the things that I wanted to create. So we actually invested ourselves in purchasing. We spent a few $1,000s and somebody programmed a AI copywriter to write in our voice. And we shared our story or questionnaire, programmed it, and we spent a few $1,000s doing it. And once we got through it, we're like, why did we pay that guy a few $1,000s when we had to answer all the questionnaires and stuff anyways? So what we've actually done is
Mhm.
we've taken that same process, same instruction, and on that link that Vinky provided, you guys can access that step-by-step guide of programming your own AI copywriter. And we're not like that's free. Like I want you guys to have that just because you're here, right? And
Mhm.
you showed up. So that has been a game changer for helping us get content out online as well as emailing in our voice as well. So getting something like that in place, I'm hoping will be a great jump start for a lot of you, but make sure you click on that link that Binky threw in the chat because you can access it there. And there's also more information about the plans that we've worked out with Vinky and always available to answer questions you guys have. And we can connect on LinkedIn. You can reach out to Vinky. She'll connect you directly with us. But
Definitely, yes.
but at the end of
Mhm.
the day, look, we're here to help you guys out. We're changing how people are raising capital in this industry and in this space. And a big way we do that is not through not only just the trust, but how we're integrating video assets and webinars and workshops. So yeah.
That's good. No, thank you so much. I really appreciate your time. And we do have a couple questions though in the Q&A. So
Okay.
let's address those two before we
Sure.
call it a day because the recording's gonna go out to everyone anyways. And the link for our Dylan site is gonna be available with the recording and also on all the social media channels when we post the video out. So you guys are welcome to reach out to him and learn more about his program. So there is a question from Rao, Dylan. If you can check the Q&A, he's asking, do you or SEC have a checklist for passive investors to do due diligence of the sponsor and the deal? Please send it to me.
Was that further up? Uh,
This is in the, no, it's in the Q&A. Go to the Q&A box, not the chat.
got it. Okay. Do you or SEC have a checklist for passive investors to do due diligence of the sponsor and the deal? I don't. Actually, we don't have a checklist for that. Um, Actually, you know what? I think I have one for our own fund that I actually did a few years ago. So I was thinking through Capitalist Pro. Let me look into that. You know what? If we've got are there any other questions right now, Vinky?
Yeah, there is one more question. He's asking again, do you set up fund of fund? What is the process cost? Give reference links, etc. So we are not talking about fund of fund over here because or the fund structure that was not the part of our today's discussion. Is that correct, Dylan? Because we're
Yeah,
talking
yeah.
about setting up the systems today, not necessarily fund of fund. We definitely bring another guest who can talk about fund of fund structures because we definitely need some legal advice there. So maybe I'll bring Kim Lisa Taylor to talk about how to set up a fund or fund of a fund structure. So we'll come back to that another day. But for now, Dylan, you have something for now that you wanted to share?
Yeah, I was gonna see if I could find that. See if I could find that resource.
Thanks, Barry. We definitely send out the replay very soon and all the links with it. And you're welcome to schedule a call directly with Dylan and he can walk you through his processes.
Yeah, unfortunately, I can't. I was hoping I could pull up that
Okay,
resource,
that's okay.
but
I will send you his email. You can save his email and you can, if you find it, you can email to him directly. Okay?
yeah, and honestly, I would probably connect with other operators, see what they have as well, and talk to a securities attorney if you're looking for what the definition of a pre-existing relationship or substantive. So yeah, if I can access that document or find it later, happy to send it out. But Vinky, really appreciate you having me on and appreciate those that have stuck around for 90 minutes. So
Yeah, no, thank you so much. We definitely have a lot of interest. And thank you again, Dylan, and thanks everyone. I really appreciate your time and interest. And like I said, you cannot build anything overnight. And then we definitely have to have the systems in place, so the process is in place. Those are repeatable so that we raise capital, consistently. And the other thing I wanted to mention over here is capital raising is not just like a game or like a short-term thing. It's a full-fledged business in itself. So if you consider it like a business, you will definitely put the systems in place or the processes in place. And for that, I think we are always here to answer any questions for you guys. So reach out to Dalen. He has a solid system and then he can help you with that. And also, the one last thing I wanted to say before we go, always remember that consistency always beats intensity. So let's work on that, and I'll see you next time with another awesome guest. Thanks, Dylan, again. Thanks for your time.
thank
Have a
you.
good one.
Appreciate it,
Bye,
guys.
everyone.